Welcome back to Best Prop for You. Bitcoin has now dropped for, well, it's the fifth consecutive session if we close in the red today. And so the reason is entirely macro. US Treasury yields are surging as rising energy prices, full of course by the ongoing Middle East conflict and the closure of Treasury, sends inflation expectations much higher. Producer and consumer inflation both jumped, which means the market has now scaled back any hopes for Fed rate cuts this year. Some are even whispering about potential hike. We are actually close to 50% of a hike up until the end of this year. With the FOMC minutes coming tomorrow, and also, of course, we have the replacement of Fed chair. The dollar is strong, tech stocks are dropping, and risk assets like Bitcoin, of course, are taking a serious hit. So, chart exhaustion up at around the 82.5K, right? No momentum divergence, which could be seen as a good sign. But, and unfortunately for the bulls, despite having a double top here below the 61.8 Fibonacci, we did also lose the 50 Fibonacci at 78,900, let's call it. But importantly, this has become now a very critical structural cluster, because we have the 50 Fibo and the middle Bollinger Band actually aligning on this particular level. Another thing that, of course, is of high importance is the flattening of the bands. Okay, there is some sort of volatility here, though, which could suggest, okay, that we might see an initial leg down to around the 75K, where we have had a previous swing low back in the end of April. And from there, go all the way up to the upper Bollinger Band. The levels we need to pay attention, apart from the 78.90, of course, are the 81K and the 80K. And then above that, of course, the Bollinger Band, because we also have to actually look at the ultimate short to medium term target at the 61.8 Fibo. We need to reclaim that level, but more importantly, we need to reclaim the 50 Fibo and stay above it, because for now, this has been an initial test. It's just only initial though. And if we stay below that level just for a little while, and we manage to do a quick reclaim of that level, then we should be good to continue with that leg to the upside. So the idea here is a long position potentially, right, at around the 75K, or a short position in the very short term down to that level, or both, depends on your risk appetite. So how I see this is a double bottom, which, by the way, for now, it doesn't look like we have actually fallen enough to the, let's say, 75-65, an important level, okay, to consider this as a potential weak attempt to a potential double bottom formation. We have, of course, reached the previous low over here, but we'll look at the internal structure, since we have already, of course, fallen into territory that we could be still into correction mode, given, of course, the flatness of the bands that is still signaled within this range. And of course, since we don't have really a lot of signals on the daily, apart from the flatness, which suggests, a potential bounce to the other side, we have to go down on the 4-hour chart and see if we have anything that reveals a specific signal. And in this particular case, we don't see an RSI divergence. But importantly, if we do see another leg down towards the 75K, it's likely that we're going to see a divergence, because we are pretty much on price where we were before, but the RSI has moved higher. Important levels to take into consideration, of course, is the median line at 77.75, then the swing low at 78.68. But more importantly, and I will look at this as a zone actually, we are over here. this would be potentially a buy zone. Now, if we fall, I repeat, we're likely to see an RSI divergence. It would be supported by an indicator. It doesn't mean we cannot go up, or we always have to wait for the confirmation. But obviously, if you're respecting the rules of the market and the charts, that is your choice to make. I would be looking potentially at a reclaim of the 23 initially, then the 38, and then the 50 Fibonacci, which again, not on the daily chart in the middle, but on the 4-hour chart aligns with the upper Bollinger Band. So these two levels are very important, and they involve a Bollinger Band and the 50 Fibonacci. So until we reclaim that 79.40 for me on the 4-hour chart, I think we still could see further downside. In the very short term, of course, the high activity zone that we are looking at currently is between the 76K and to the top, let's say 77.20. Okay, this is the one. We could possibly go a little bit higher, but if we fail to cross above the median over here, the median band, and the swing low at 77.60, then the chances of continuing lower down are going to increase. And what we want to do, since we don't see anything else on the RSI now, we want to go a little bit down, further down on the hourly RSI, as we always do, of course, to see really what's going on there. Well, here we do have an RSI divergence, okay, as you can see from before the last leg to the upside. And since then, we have started to consolidate. Importantly, we see a double bottom over here now in the 1-hour chart. Okay, and that double bottom is exactly where the Bollinger Band lies as well, at 76.20. The bands are too flat to consider that we are, due a bounce or further downside. But typically, when the bands are flat, we bounce from one side to the other. Now, the bottom has been rejecting and retesting prices more often than the top. Okay, so if we do see prices moving up, we'll have to pay attention to the 76,082 over here. Okay, and after that, of course, also again, we pull our tool down here and look at this. The 50 again seems to be our friend. 50 again comes at the upper Bollinger Band, 77.26. Okay, and I repeat with a previous divergence signal. Okay, so in the short term, if we go higher up and we fail to cross above 77.20, okay, then we could see this being the rejection level, the resistance level that is going to lead to another decline, to a flash down to 75K, where we could potentially start seeing better positioning from bulls to initiate a move up to 80, 81, 82, and actually even reclaiming the 61.8 golden pocket level for the potential continuation of this bull market, bull run. So the Bollinger Bands will eventually squeeze further and force a major move, starting from the 1 hour and all the way up to the 4 and then the daily. So watch for that flash to potentially 75 as the ultimate buy zone, and respect your stops if the macro data tomorrow completely breaks the structure.